Welcome back. You're still with us on Editor's Roundtable. Now, generally we talk about the week gone by, but in the year that has gone by so far, auto stocks have been the biggest gainers. In fact, if you look at Tata Motors, it's the biggest Nifty gainer this year, up about almost 50%. Bajaj Auto, which was a laggard for so many years, is now up 30% this year, while Maruti is up 15%. Now, in the week gone by, specifically, the commentary from auto companies has been very positive, both for the domestic as well as for the global market. Now, if you just look at a couple of them, Ashok Leyland had an investor meet where they said that they are confident of the CV upcycle continuing at least for the next 1 year. They expect medium and heavy commercial vehicles to grow 10%, and Ashok Leyland will outperform that. CEAT says that their market share in the passenger vehicle space, which is currently 15%, expected to grow to 18 to 20% within the next 3 years itself. And Maruti saw very strong bookings for their latest Jimny, and they've received about 31,000 bookings, and they're getting 150 bookings per day. So that just speaks about the demand trends there. Now, on the export market as well, auto companies are very bullish. CEAT says that they're targeting 25% revenues from exports compared to 18% earlier. Ashok Leyland said exports will double over the next 2 to 3 years. And M&M just launched their XUV 700 in Australia. But if you're looking to get the car, you'll have to wait a long time because of the painful waiting period, right? But Ravi, in the break, you were telling us about how you prefer auto ancillaries compared to auto OEMs. Is it because of the valuation game?
No. I think for a change, even the auto OEMs are not that expensively valued. But the primary reason is that there is an EV disruption on the horizon, and you never know who the eventual winner will be. So two-wheeler space has obviously gone through a lot of pain in the last 5 years because the cost of ownership jumped from, say, entry-level bike went from 65,000 to 85,000. That's a huge jump. So we've been through a 4-5 years of down cycle, and there is a cyclical revival in two-wheeler. So some amount of revival in the stocks is absolutely, and the valuations were also cheap. But now going forward, you have to really ask the question, if the E2-wheeler, of course, over here it seems that, their regulatory headwind is actually abating because the subsidy on the EV two-wheeler has been reduced. So if that is the case, then the two-wheelers can actually have a good run from here as well. On the PV side, again, the same question. At this point of time, we don't know whether the EVs in India are on the horizon or no, but sooner or later that will come, and market usually starts factoring in this disruption 3-4 years in advance. So one has to be careful from taking a 3-4 year call on the autos. But from a 12-month point of view, I think the cycle is just about begun. So the numbers will be good over the next 12 months for sure.
Ravi, Nigel put out a nice piece on the holding companies. Normally, they tend to get into fashion when markets are peaking out. Yeah. We are nowhere close to that. Anything that you like in that holding company space?
No, we have never owned a holding company. We always focus on the operational business. Sure, I mean, there might be some value to it. See, the holding company valuation value is actually realized when there is some kind of a corporate event happening, where there is some demerger that happens, or that capital is actually allocated to some operating assets. If that is the case, then there can be a real story. Otherwise, it just remains a reversion to mean story.
But I've been tracking your fund as well and your activity as well. You've been buying into a lot of mid caps of late, participating in blocks as well. What's the general mood in the mid cap and small cap? What are the themes that you like?
No, I think the mood is of optimism, not euphoric, but optimism. And we are actually still looking to deploy, and a lot of ideas we are getting. We are finding a lot of ideas where you can actually generate 15 to 20% kind of a CAGR over a 4-5 year horizon. So broadly, the 4 themes that we are bullish on is energy transition, manufacturing, financialization, and consumption. I mean, of course, this pretty much encompasses the whole thing. I'm leaving out for the time being a back office to the world or the pharmacy to the world. I'm not so much focused on export-oriented sector, more on the domestic-focused sectors. And within that, of course, manufacturing has been a big bet for us, and that has really panned out, especially the electronic manufacturing space. It's hot and buzzing right now. When we bought it, we thought we were buying 20% outside our comfort zone, but we were bullish on a 3-4 year horizon. But the market seems to right now being rewarding front-ended. Returns are not waiting for the actual story to pan out, but running ahead of time.
Okay, well, we've run out of time on this show, but it was great speaking to you, Ravi, and please come by often to our office.
Sure, my pleasure.
We'd love to have you here yet again. Well, that's the word coming in on the markets, and it's curtains down on the day, the week, and the show as well. Have a great weekend. Thanks for watching Editor's Roundtable.